Yeah. Yeah. Morning. Happy Thursday. All right, let's get going, y'all. All y'all. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne. Let me know how I can help. Today is Thursday, so if you're in my swing trading group, I will see you. Or I guess swing trading or day trading group. I will see you today for swing trading in the swing trading room. One more before the end of the year. Now, I don't know the date of New Year's, but we'll probably get one additional. So this isn't the last one, I think. So anyways, no need to take vacation quite yet. There's still work to be done. So I will see you over there. Yeah, Sunday. Well, Sunday's Christmas, so the markets are closed, right? So, and then Boxing Day. Nobody trades Boxing Day, do they? So anywho, but yeah, we can get definitely, yeah. And then New Year's, yeah, what is that? Is that a Sunday? I don't know. I have to look at the calendar. Anywho, we still got a lot of work to do. Today the markets are open, so we have to look for our opportunities and identify our threats. So I recommend, I think we should go through dollar, yen, gold, oil, Bitcoin, global stock markets. But you let me know what you want me to cover, and I will do my best to do so. You are the boss. I am a humble servant. In the description below, there will be a link to my book, Strategic and Tactical Forex Trading. Please click on it. I think you already bought it, so would you leave a review? Okay, that would be great. Second thing, I'd like you to join FX Bootcamp so I can further help you. It's not very expensive, $88 a year. Used to be what, 1,000? 3,000? Anyways, I dropped it by 90% because of COVID, and I just have left it there since then. So join FX Bootcamp. Let me help you further. And then lastly, get a trustworthy broker. Someone that actually executes your trades and doesn't trade against you. That's tradersway.com. The link is in the description below. Thank you, Traders Way. All right, let me know what I can cover today. Please type in the chat what you're interested in me covering today. Maybe it's a commodity, a particular currency pair. Maybe it's a subject. Please type it. We have Bitcoin, sure. Aussie dollar, sure. S&P500, sure. What else could I do for you? Gold and oil? Absolutely, I can do that. Aussie CAD, sure, Aaron. WTI, my pleasure. I believe it's been rejected at 80. Pound dollar, pound Swissy, Euro CAD. Sure. Looks like pound is quite weak, so I imagine you're killing the pound. Dollar's weak though. Maybe stabilizing in December here. Okay, we're stuck at 104. Yeah, gotcha. Euro pound probably looks better on that one. But anyways, yeah. Yeah, burned. I believe I will. I haven't even had a second. Not even a second. So I imagine it'll be in the first couple of weeks of the new year. And I believe it's 10 bucks, 10 euros. Only because people have already paid. By the way, guess what I'm planning? I have a meeting today with a cruise line. We've had email correspondence, but I'm planning a cruise for us to get together in January 2024. 13 months from now, I'd like for us to get together as a community for networking, dinners and cocktails, but also some training. And one of the things I would like to do is an overview of 2024 at the beginning of the year. I think it's from Miami to Cozumel, Mexico, and back. So I think it's 3 nights, 4 days, 4 days, 3 nights. Yeah, so I'm literally talking to them about it. And today I'd like to go over some specifics with them and get some ideas. But it may be happening. So what do you think? I think it's going to be the third week, somewhere around Martin Luther King Day in America, just to give you an idea. The problem is I wanted it a week or two earlier, that right after the new year, but apparently a lot of people use that as vacation time, and it's very, very expensive. And if we wait to the third week of January, it's much more affordable for everybody. So imagine lots of events where we can get together as a community, but then we can take advantage of the time for some training and stuff like that. And that gives everybody more than a year to pull it together. And that will be our first annual conference. And the idea is if it works really well, and I think it will be, we can rinse and repeat every year without much trouble. Is Nashville still happening? Well, see, that's the thing. I think I could do the conference for half the price than Nashville. So I think what'll happen is everyone will just fly into Miami, and then you Uber to the boat. And I'll be waiting on the. We'll have a private cocktail party at departure at sunset, and we'll all meet together. That would be the first of the gathering. Yeah. You know what I'm talking about? So they seem to be very excited about having us. Before they get too excited, I want more details. But I have a feeling I can do the conference for the same price that I've paid to go to conferences. Right? For the same price I've gone to conferences, where you pay the ticket price to go to the conference, but then you got to pay for your hotel, and then you got to pay for your food and your cocktails and all that kind of stuff, right? I think I could do the conference for the same price as the conference, including your room, including your food. I'm like, oh my God. So yeah. So anyways, that might be happening. That's right, Thiago. Lots of time to plan. Yeah. All right, cool. So that be that. That be that. Models and bottles, Richard. Models and bottles. Yeah, you have to bring your own model, though. All right. All right. So Kitty Cat Quiet Week. This is daily charts, by the way. So this is a longer term view. US dollar Quiet Week. Okay. Which is actually seasonal. Just amazing how that just happened, right? Yen is strong, which is unseasonal. CAD is just being destroyed. Pound is super strong, then pound super weak again. Remember, I think a lot of this pound strength had to do with the Bank of England. Okay? They had to jump in to save their own pension funds. And Aussie giving back. Now, we thought this might turn on the COVID reopening of China, but there's turmoil in the streets, so that doesn't look that great. And yes, there may not be a lockdown, but 50% of the population is COVID, so that's not good for productivity. Rumor on the street is that they're going to actually remove the restriction for foreigners. So if you go to China now, you have to spend, I think it's a week in your hotel room. Very prohibitive for many. And I believe there's going to be an announcement soon where they're going to remove that restriction completely. So there you go, a complete reversal. We don't see it in Aussie and we don't see it in CAD, do we? Not yet. Remember, we're still in demand destruction mode from a potential decline in global productivity. And not past GDP, like today's GDP, but future GDP. So let's take a look at the stock market. And this is what I have drawn days ago, not yesterday, even before yesterday. What do you think? Pretty reasonable? Can I argue that that was pretty good? Like you could do it this way. It's just subjective. It's all right, huh? Yeah, all right. Okay, so it looks like a, okay. Now remember, you got to go all the way back in time. This is what my super secret, fundamentally based alert service predicted, this line right here, as being a top for the S&P 500. Oh my God. Yeah. Smoking hot like fire. When I turn, you desire. I'm fresher than you, 'cause you white. Anyways, check this out. If you were a bull, you're going to think somewhere between these dotted lines. Sign on the line that is dotted. That's a quote from Glengarry Glen Ross, just if you weren't sure. Where would you exit? April grind. Made all my money back. News this morning. Royal, I'm glad you did, but that sounds horrible. just the whole idea of it. That you lost. It seems like you lost a bunch of money. Well, that sounds very dangerous. Doesn't sound? It sounds chaotic. Yeah, and then lucky. I mean, all of it, dude. It's so funny. How can you, right? So if you lost a lot of money, I don't even understand how you can lose a lot of money quickly with proper trading. And the second thing is to then make it back. Trading's supposed to be a slow grind. Slow grind. You should never lose or make a lot of money. You should just push the ball forward 2-3 yards at a time. No Hail Marys. Okay? Yeah, lesson learned. Let me be frank. Doubt it. But I hope so, but yeah. Those types of lessons, Royal, and I'm not picking on you. I'm laughing even at myself, where that type of behavior is very difficult to end. There's no lesson learned. You're going to repeat it 1,000 times over. And you probably need to go through a massive period of pain that either puts you out of the market, puts you out of your misery, or you really, sort of like the alcoholic that one day just says, I am going to stop. Right? You have to hit rock bottom. And most people don't. They run out of money. They don't hit rock bottom. They just run out of money, right? So just be careful. A lesson learned would be, spend a year in FX boot camp learning how to trade properly without trading real money at all. Your lesson learned should be put in 100 hours, maybe 1,000 hours into your education and trade a demo account for 1 year. Okay. Royal says he's going to take some psychology courses for trading. That's really interesting. Yeah, I think so. I will write a book on that, in fact. So anyways, it should be interesting. I have taken quite a few psychology classes in all my years of college. You got to understand, I have like 10 years of university education. I'm not even joking. What an idiot. I have 10 years of college education. Yeah, you're going to take psych classes for sure. And when it comes to trading psychology type classes, very often you just start with biases and stuff like that. I don't know. I mean, I guess it's okay, but I wouldn't. I guess the classes that I've taken, I don't think really address trading. But I would like to interview like military leaders and professional athletes. I think there's a correlation with both the strategy and the discipline, the psychology of having to perform every day is the same as the psychology of having to perform every game. Right? Doesn't matter if Messi is one of the most famous football players in the world. You got to get to the final and you got to score goals. Doesn't matter if you're the most famous, most successful of all time, and you get there and you don't perform. And you're like, but dude, I've been performing for 20 years. Can I catch a break? No, F you, perform or you're fired, right? There's a pressure to that. The markets don't care that I've been doing this for 20 years. F you, perform. So, that, right? So anyways, that's what I would do if I was me. And then I would invite them to come to our cruise. Okay. All right. But how about this? What's the psychology of sitting down and doing about 10,000 hours of video recordings and putting them on YouTube for the entire world to see for free? What's the psychology of that? Patience, discipline, consistency, reliability, right? Yeah. Patience and discipline are a big part of being a trader. So anyways, let's go here. This is Nazi. Let me change this. I don't like it. Let's look at, I guess, just Confluence. Okay. The target for NASDAQ is, I guess, what are we just going to say? 10,000? It's not quite. It's 10,500. All the way down to 10,000. Yeah, I guess we can say 10,000. Now, the chart actually says specifically 10,500. $10,584.6. So there's definitely another leg down on this one that's plausible in the next 2 weeks. And then that puts us down back to previous lows. How does that make you feel? 10,000, I'll say 600 on NASDAQ. Okay? What do you stink? Right on. Thank you, Marco. I always want to call you Macro, by the way. Marco. MarcoMacro.com. Huh? There you go. See? Start a new business. I renewed last week. You are my mentor, sir. Hey, anytime, Marco. Marco the Macro. Nothing micro about Marco. Okay, so that's that, Nancy. Hong Kong. Look, still trending up, bro. Now, the thing is, will my ETF go up? And I think it's been doing okay. I don't remember the ETF. It's I got a bunch of Chinese ADRs in this ETF. Chinese ADR ETF. There's so many, I guess. I don't know what I have. Direction. I know I have some directions. I don't remember which one I got. I guess I could just log it into my account, but 1 day up 8.4%, huh? But yang and yin and yang, that's funny. I don't know which one I got. I'd have to look it up. But I think they're going to start performing now, right? So, anywho, this looks up, don't you stink? Now, this could roll over, and that's what we're watching for here, this rollover at a potential high. Keeping it below the psych level is what we're looking at here, obviously. So we'll see if it rolls over. It'll be interesting. But compare and contrast that with some of these other stock markets, like Europe, and a lot more trendy, huh? This isn't really trendy, where there's a beautiful trend to the upside when you look at the positive integer of the slope of the mean. This doesn't have much of anything. The mean is sort of basically sideways to now slightly up. Okay, which is seasonal, by the way. And seasonality says don't be shocked if we're going to take a trip to the downside. Boom, boom. Okay, seasonality is like, hey, dude, don't be shocked. And that takes us all the way down to 3K. From 4K to 3K. Smells like a 25% decline. Where do you stink? Huh? Take a ride on the wild side? How about Germany? Same dang thing. So then the technicals that you're looking at are in here. Okay. So what's next? Well, maybe this is a top. Maybe that's a lower low, lower high, and all the way down, bro. Bro. Huh, boy? Okay. All the way down to 10,000. All the way to 10,000. How do you take that entry? Which one? The one on the, I mean, it's the same one as this one. Euro 50? Okay. Easy peasy. I think this is the one you want. Okay. The thing is, if you are already planning for this, that's the big if. Now, I've been iffing that all year, knowing that there will probably be some up at that point of time. And we also know the window that I pointed to a year ago. No joke. I am not joking. Between, right? We'll say the second week of December, right? To, let's say, the second week of January. Oh, well, you can't, if there's no pullback, you can't take it. That's it. It's gone. Okay? You either chase the price or you don't chase the price. That's it. There's no other scenario. Now, there is a way to do it, Denise, and I think you got to go back a year, but I think about October of last year, I taught people how to kind of do it because we were very, 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 very aggressive, and it worked. We had a really good month. I think October of last year was a great month, you know, well above target, but I expected it to be above target. So, you know, that's how we did that. But then I got crushed in November, gave it all back. November collapsed because China went back into lockdown. And that's not seasonal. That's not, you know, it's not even really economic directly. That's a geopolitical decision which crushed the economics of a normal scenario. And, you know, so it just destroyed. But we walked into October of last year aggressive. So yeah, I showed people how to do that. And it's dangerous and I don't like it. And it never feels good while you're doing it. Yeah. But you don't really want to chase price. I call it dirty money. But anyway, so what you're supposed to have is just a career based on that you understand why the European stock market's going to fall somewhere in the middle of December or all the way out to the middle of January. It's just, you're ready, willing, and able. It's already part of your plan. It's all by design. It's God's plan. And who are you to argue with God? So you're like, okay, well, you could trade the double top, but that's risky. So you could trade the lower low, lower high on the roll reversal, right? And that's it. You're done. You're done. Okay. So you can try to do it. For example, you go pachow. Okay. It's not a good price to sell, by the way, just so you know. I'm on longer term support. But one of the things you want to try is like, could you have a stop up here? Can you afford that? Can you afford the stop here? Where can you afford your stop? Okay. for example, and now that's your game. Game on. But I'm telling you, if you can't predict the future, you're kind of screwed. Pardon my French. If you don't know this is going to go up before it goes up, and if you don't know it's going to go down before it goes down, what are the odds you're going to get that right consistently year after year after year after year? Okay? Now, this is Euro, not S&P 500. I don't care. But in the annual plan, somewhere in this period, I expected the stock market to rally, even though I fundamentally think it's wrong. And somewhere in this period, I expect the stock market to fall. And that's just factual. That's my strategic understanding of the marketplace. Tactically, I could trade it. Tactically, I don't have to trade it. Right? I was short the stock market here. I'm short the stock market now. The rest is just technical analysis. Oh my God. Oh my God. Okay? But to be clear, trading here like I just did is really, that's not a good trade. You're supposed to be up and ready, willing, and able here. I'd rather you kick it off the moving average. Okay, trading here is quite sloppy, but whatever. Or you trade it off the 4K. Even better. You've been living underground, eating from a can. You've been running away because you don't understand how to trade the euro. All right, so anyways, look, Germany is the same. Great, great. S&P 500, look, it's the same. Like, dude, do you understand? Let me say it again. Because we talk about macro trading. What does it mean to be a macro trader? You're shorting Germany, Europe, okay? You don't quite like Hong Kong yet, but maybe you take a shot on Hong Kong, S&P 500, NASDAQ, and maybe you're thinking about the UK next. And you know what? That's a lot of trades, right? Macro is one idea. Okay? I call it Newtonian physics because I want to sound smart. It sounds brilliant. God dang, son. Yeah, it's Newtonian physics. Explain it to somebody. Sit down with them. You're like, look, it's simple. It's Newtonian physics. Okay? The world, according to Newton, works like a giant clock. There's a sun, and planets, because of gravity, rotate around the sun. Okay? Mass and gravity. Okay? So imagine you have a trampoline with a bowling ball in the middle of the trampoline. The trampoline itself is space and time. Okay? Now take a croquet ball and try to push it in a straight line. What happens? Can you do it? No. What happens if you take the croquet ball? So let me do this in pink. And you try to push it in a straight line. Here's space and time. There's the trampoline. What happens? The croquet ball ends up over here. Okay? And of course, as the ball slows down, what happens? It ends up here. Cool. Now, that occurred because of this. Newton then says, well, look, if you understand the cog, here's one cog. A gear. Okay? A gear. And you rotate the gear this way. What happens to this gear? Okay? Huh? And then you add another one, and then you add another one, and you add another one. Well, how many gears, if I added another gear here, and another one here, and another one here, you have to understand that they're all going to turn clockwise. All of them. You following me? It's like a clock. So in this case, the thing that turns everything, I say, is risk off. How do they get to that conclusion? Macroeconomics and fundamental analysis. So it just happens to be, this is the S&P 500. This is the DAX. Okay, this is the FTSE. This is the Euro 50. Okay, this could be NASDAQ. And if I get the center one right, risk off, right? If I get risk off correct, I am probably going to be right on all of these things. 1, 2, 3, 4, 5 profitable trades because I understand the mechanical engineering aspect of what we do. This cog makes everything else rotate clockwise. And if the cog in the middle reverses course and it goes clockwise, these all go counterclockwise. I understand the nature of the physics. According to Newton's view of the world, he saw in the study of things that are big that the universe works in a mechanical fashion. The planets rotate around the sun in a similar way that the moons rotate around the planets. And that, right? And galaxies also spin and rotate. Okay? Now, the cool thing I like about Newton, because they always say, oh, he's the guy that did the gravity thing. He did a lot of other things in his life. I think he'd be surprised that people talk about that the most. So remember, when he did all of that, he also had to invent calculus. There wasn't a math at that time. But he was also a politician, right? He was a businessman, an astrophysicist, right? Mathematician, and a few other things. Well, see, yeah, so Darko, so I very often, I mean, I don't go into speeches about it, but I often say, look, there's only two things on this chart, price and time. In the same way that there's space-time continuum, this is a price-time continuum. Okay? And the gravity is equal to the macroeconomic condition. Okay? The global economy is the gravity. Okay? Also, when you look at fractal geometry, which is looking at these markets for multiple time views, it's right? Your point of view, your bias is relative, right? Your bias is relative to your point of view. What time frame? Okay? Now we're talking about Einstein's laws of relativity. Okay? Where in price and time are you observing these markets? Your bias is going to be relative to where you are in price time. At which price time continuum are you? The weekly, the daily, the 4 hour, the 30-minute, the 5-minute? Okay? So you have to look at the theory of relativity for that. Because Einstein said it depends on where in space-time you are when you're the one observing. And I would say, borrowing from Einstein, where in the price-time continuum, price-time continuum are you observing? And therefore you would get, so like, look, on the daily, this is bearish. And look, I've had it set bearish for weeks now, guys. Weeks. And look, it's falling. Look, I even drew it out. Why? Well, on this time frame, it's bearish. You can't argue it. There's nothing you can argue that makes this bullish. This price time continuum, okay, it is bearish, and that's that. So now if you're like, okay, you might say, well, I don't trade this time frame. I'm like, well, maybe strategically you should observe price and time on this continuum. And then drop into, let's say, a 15-minute chart and wait for the two time frames to be congruent. At what point should you be selling this? If you already knew, you should be selling this. Do you understand? And this thought process is already in my book from 2008. Dude, that's more than 10 years ago, huh? It's crazy. So look, this is just how you trade. Okay? I just like to look at these markets using the thought process that's been applied to other complicated problems. Okay? And so anyway, I'm going to write a book series on stuff like that. After I'm done these 3 books, I'm going to write another 3 books. But maybe by then, who knows, maybe I'll be retired at that point and I'll just write them for fun. Darko says many different spaces and time. Yeah, and what we're talking about is dimensions. Yeah. In this case, it's you could argue it's 2-dimensional, but I do think it's 3-dimensional because when you look at only price and only time, it doesn't explain the force. You're not measuring the gravity. Okay? And you got to get the gravity right first before the price and time matter. The price and time almost don't even matter. Do you understand? Like you could be a pretty poor technical trader. If you knew to short, you could be very mediocre. Like how many people would agree with this? Just looking at this chart in the area I've circled. If you knew and you were 100% convinced, so don't worry about right or wrong. Just imagine a trader that is 100% convinced that in that circle, they should be selling. Do you think someone that's okay at technical analysis could trade that profitably? If they were 1,000% ready, willing, and able to sell, and they're like, oh my God, this looks like a double top. Okay? Even if they sold here or here or here or here or here or here, even if it's a piss poor trade, I think they're going to make money. They understood the gravity of the market. Okay? So to predict, the ball is here, and you're going to push the ball here. You're going to force the ball here. Where's it going to end up? If all you knew is what? Force. And I suppose the counter force or drag, we'll say, right? This is the difference here, and I think I talk about it in my book. The difference here is centrifugal force and centripetal force, but we don't need to get into that. But you have force, and we'll just call the centripetal force, we'll call it drag, because it's touching the trampoline. So where's the ball going to end up in the future? Well, you don't know. And it's the same thing, like there's not enough information here. So if all you knew was price and time, it's not enough information. You're not going to be very accurate. So what are we missing here? Gravity. How much gravity is there? If there's a lot of gravity, okay, it's going to end up somewhere very, very, very significantly away. Okay? So, right, it could end up here or it could end up here, depending on the amount of force and the amount of drag and the amount of gravity. And if this gravity is smaller, it looks more like this, then it's probably going to end up here. But if it's bigger like the blue, it's probably going to end up here. And if you want it to end up here, you're going to have to add more force or reduce drag. I mean, dude, it's just math. But you got to get the gravity right. Otherwise, the other stuff is just not enough information. You'll be kind of accurate, but you won't be very accurate. Okay? It's a strange way to explain it, but was that okay? Did that, I don't know. I guess if I explain the same thing 700 different times, it'll click for 700 different people. I just want it to click. So gravity here is your macro econ. Okay? Is the global economy expanding or contracting? That's the whole point. And from there, you understand which way the money will flow. What's the money flowing? The cogs. Because now you look at it this way. Okay? Okay? So you say from your analysis, macroecon's moving this way. Okay? So you say because of that, you know the direction for Aussie. Okay? And probably CAD and probably Kiwi. But what about yen and dollar? Oh, you're like, oh, dollar would be here. Oops. Okay, so this goes this way, this goes this way, and this goes this way. You understand? Newtonian physics, it's that simple. Thank you. Exactly out of Tomb Raider. Oh man, I used to play Tomb Raider 1. We'd have Tomb Raider parties, so I'm glad you brought that up. Dun, dun, dun. Pull the lever. No. Bring. Oh. That was the first game, the first video game I know. Can you do Tesla now? Hey, Tesla has too many cars and they're putting them on sale. That tells you a lot, huh? But anyways, Tomb Raider was the first game where I really, you'd sit down and you'd have to bring a pen and a paper. Because you'd walk up to a big door and it'd be locked. So you'd jump her back. Boom, 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 and you'd look around. You're like, wait, okay, there's things scribed at the top. What do they mean? And what is this? And you don't know. Oh, and there looks like there's a keyhole somewhere. And there's a pattern. And you're like, I better write it down. I don't know why, but I better write it down. It's probably going to be important later. And sure enough. Yeah. The other thing I think is amazing about the human mind, my son downloaded Tomb Raider like 4 or something on Steam. It was free, or it cost a penny or something, right? And this is from what, 1994, maybe? And I remember the maps. I'm like, oh, be careful here. When you run down those stairs, wolves are going to show up, so make sure your guns are out. Just loved that. Okay, so anywho, there you go. That's that. Okay, let's burn, baby, burn. Let's do commodities. Gold, oil, and Bitcoin, y'all. Okay. Yep. Huh. If you were a bear, it's pretty straightforward stuff. I mean, here's my advice to you looking at this chart. If you went from bearish to bullish and bullish and bearish, if you shifted your bias multiple times here, you have no strategy. Okay. How much easier is it to trade when you just simply look at this and like you're bearish? Okay. Now this is a target. That's the only confusing thing about this chart. Okay? Okay? But as a technician, technical analysis, what have I taught you to do when there's a lower low? What have I taught you? W, 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 D. What have you been taught? What's in your rule book, your playbook? What have you been coached to do? Wait for the lower high. Where? Lower high, where? Oh, there could be a million places for lower high. No. Can you be more specific? What type of resistance? You could have resistance at a higher high. 2155, sure, that's dynamic resistance. Yep. So you could use that. But more specifically on price action. Because remember, moving averages are lagging indicators. Price action is a leading indicator. Take care, Hope. Have wonderful holidays, huh? Grind says, you got me, coach. Okay, that's fine. Sometimes I don't ask properly. Monthly M3. No, I'm talking price action. Price action. What would we do over and over and over again in a situation like this? The old fib? No, you could. Yeah, I mean, it's not what I teach at the role reversal. Thank you. Yeah. I mean, it'll end up inevitably, Jeff, being a fib. So you could. That's not the answer I'm looking for, but that would work. So yeah, no, it's at the role reversal. So support, 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 support. Oops. Support, 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 support. And that's why I draw these little boxes, by the way. If you never really understood all that, that's why I draw all these. Yeah, okay. They're guesstimates. Okay. And that's that. Okay. Just, that's it. If you feel like your trading is out of control, we can fix that. Do you find drama in your trading? There's no drama, mama. You're creating it. You're creating the drama. It's you. And that can be fixed. But Richard, there's no could be. There could be anything, Richard. So you got to stop that language. Are you a bear or not? So to a bear, Richard, there is no bottom. Okay. But the answer is sure, Richard. Sure. But that's why you want to be short up into here somewhere. And now your stop's jammed and you've moved on to the next new thing. Grandmaster says, how much time do you spend on reading information relating to different asset classes before hosting sessions? A 24/7, Grandmaster Elton? But right before this session, I was walking my dog. So I never know what you guys are going to ask me. So Newtonian physics was not something I prepared this morning. And talking about the price-time continuum and macroeconomics being the central force of what we do in our multi-dimensional analysis of the financial markets. No. But that will go into my book, all right, in the future. But that's, Grandmaster, is actually how I look at things. I mean, that's why I was able to do it. I actually believe all that nonsense. I actually view the world that way. Well, Lucas is right here. Double bottoms are not double bottoms until they're double bottoms. It's a different form. Like I say that, like we're going to stay in a range forever and ever and ever and ever and ever. Correct? Until it breaks. Well, a trend is just a sloped range. So the trick here is knowing when the gravitational forces will change. So let me ask you, do I think the gravitational forces for Bitcoin USD are going to change in the next 90 days? I'll even say 100 days. In the next 100 days, do I think there will be a radical change in the gravitational forces for Bitcoin versus US dollar? The answer is no. Gravitation will stay the same. What's gravitation? My macroeconomic outlook. How do I get to my macroeconomic bias? Through fundamental analysis. So, going back to the thought process here, Richard says, well, what if it double bottoms? It ain't going to double bottom. But what Lucas says is, if it does, I need to adjust. And that's why God invented stop losses. So you need a certain level of confidence, huh? I know I'm right. Did you know that? I am 100% convinced I'm right. But this could go up, and therefore I need to get out. But I'm convinced my math is correct. And literally, I mean the math. When I gather the data and analyze it through statistical analysis, my math tells me there's a high probability the global economy is going to contract in the next 100 days. And therefore, I know how to make money if I'm right. And if I'm wrong, I got to get the hell out. Because something is wrong. There's a variable I got wrong, but I thought about the variables. So I know I am right. And I will continue to be right until I'm wrong, and then I need to adjust. I need to be humble enough to adjust before I lose a lot of money. But I got to be confident enough to stay the course. Because I ain't in it for 25 pips, son. Okay? We'll leave those pennies on the street for the panhandlers, aka YouTube gurus. When do you know you're wrong? You got your stop loss hit. Most of the time, mine's at break even. Cool. Taking a look at crude oil today. I bet you some people were surprised, huh? Isn't that funny? I bet you somebody's surprised. Holy crap, what the hell's going on? Oh, it's the Russians. Yeah, bro, it's the Russians. Yeah, you're right. Yeah. Russians got you. Uh-huh. Look at the accuracy on these trades, bro. 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 Okay? Inzioski out. Yeah, grind like look, Look. Being wrong is absolutely totally normal. But you got to have when you're wrong, your losing trades should be, let's say, somewhere between -99 and -3. You can be wrong a lot. It's okay. Yeah, look at volume falling, everybody. On balance volume falling. Mass flow index falling. Accumulation distribution falling. Okay, and then this one rising. Well, I guess they're bears. Okay. It's totally acceptable to everyone for you to be wrong. As long as they're small, and when you're right, you're very right. What most end up doing is their losers are big and their winners are small. Okay? You have 8 trades worth 25 pips each and 2 trades that are -200 each. Loser, stinker, what a stinker. Okay? So anywho. Oh, and by the way, did you notice the psych level of 80? I mean, come on. $80, dude, 80. Remember, I tried to buy it at 70. I missed it by 20 cents. Gold, dang it. I think I had my limit on M4. I don't know if, well, I guess I mentally did. But anywho. So Bitcoin stinks. Oil coming down. XAU. XAU. Well, remember, I've had this on the chart for a very long time now, but I got that as a top and I'm looking at this for a bottom. And what I'm expecting, what my gravitational forces might end up doing is forcing this down. So I lay and wait. Lady in red. Richard says that means we don't let the profits run and you don't cut your losses. Yeah, it's true. It's a cliche, isn't it? But the math don't lie. Cool. So if I can train you, like if I can train you to do the sort of the calculations without the calculus, then job well done. Yep. Well, I do have a meeting today. It just got confirmed. I do have a meeting today with the cruise line. So who's going to come to the cruise? January 2024, 13 months from now. Yeah, we will do it, X-Trader. Yes, we will do the swing tonight. Who's coming on the cruise? Yeah, 1, 2, 3. Anybody else? How many people? Can we get 100 people, do you think? Okay, yep. Cool. Well, we got about 15% already. That's good. I'll tell them 100 cabins. How many other people are excited to spend 4 days in the middle of winter somewhere warm with a bunch of Forex traders? Anybody else? I mean, come on. What am I going to tell them today? How many people? Okay, that's good. So we got about 15% on the first day. That's interesting, right? Where can I find the info? There's no info, dude. I'm calling them on the first conversation. What info? There's a cruise. It's going to be something about Forex. There's going to be Forex traders. And we're going to go from Miami to Cozumel and back. And the third week of January. That's all I know. No, I won't bring the wife and kids, no. I always separate work from pleasure. I always do that. But when we're there, I do expect to do some work. So if you bring your special significant other, dude, if I'm planning dinners and cocktail events and training, and they might be in the way a lot. Like they might be on their own a lot. So you can do whatever you want, but I would recommend flying solo. I mean, it's a business conference, right? Yeah. Okay. Richard wants to understand standard deviations and stuff. Cool. Yep. I mean, you could bring other Forex traders and other people interested in technical analysis and macroeconomics and fundamental analysis and all that kind of stuff. And it'd be interesting too because if enough people come, I can like try to bring some other speakers as well. You know what I mean? Like I said, maybe I can bring in a retired Army general to talk about, or Marine, sorry, let's bring in a Marine instead, about strategy and performing under stress and the importance of tactics and personal discipline. You know, like, dude, I mean, dude, I'm telling you, we could have some fun. And then bring in some, I don't know, ponytail hippie yoga instructor to talk about how to manage stress. I don't know. I mean, dude, we could have a lot of fun. So a friend of mine, he throws an event every year called Awesome Fest. And he brings just all kinds of people from all walks of life to meet with the attendees, right? And he has a lot of fun. And I always thought, you know what, dude, he's got it right. That's pretty smart. So I'd like to do stuff like that. I think it'd be great. Okay, Richard wants to know the calculations for standard deviation. And so I'll give you that quickly, and then we'll call it a day. What's the cost for the trip, even though money is not an option? You know, I don't know yet because I haven't spoken to them, but I don't know, $1,300, including your room, your food. I think you'd have to, if you're going to drink alcohol. Look, I've only been on one cruise in my entire life. I have friends that go on 7 cruises a year. So I'm an amateur. I went on a cruise once when my children were itty bitty. It was a Disney cruise. I rented the largest stateroom on the boat. It came with a butler and three bathrooms and stuff. So, and I don't remember. I remember the butler needed a huge tip. So, you know, I don't know a lot of these things. I don't remember the packages. It's just, I got everything. I just bought everything. So I don't know. I don't know what these things are. But I think the way it goes down is your room and board is there, you know, I would cover that cost. Then they're like, do you want alcohol? And you're like, hell yeah, I want alcohol. Oh, well, we got 7 different packages for alcohol. Like, dude, I don't need to get involved in that. So I think the way it goes down is I'll cover all those basic costs, and then you buy the package. So you check in and they're like, oh, Lucas, I see, I see you don't have a drink package. Would you like to add one? And he says, well, what do you got? And you're like, well, we have we have this package with this quality beer and that package with that quality beer. And he picks the beer he likes, you know, but I don't know. I don't need to get involved in that. That's it, right? But what I want to do is I want to have cocktail meetings. I want to have a stage. I want to have a classroom. I want to have private dinners. So it matters if there's 50 people, 100 people, 200 people. It all impacts all these things. But I want to do some really cool stuff. Okay? Yeah, Jim says it's usually extra, but where's the cruise to? So it's all about time. I don't want a 5-day cruise. I want to go in early January so I can do an annual outlook. It looks like the only cruise that fits that from the United States is the 3rd week of January. And it goes to Cozumel, which is Mexico. I think you spend a day in Key West, Florida. Then you go to Cozumel, then you come back. It's like, I don't think we're going to go see Key West. Maybe we'll have an onshore lunch in Key West, but then I want to work. And then when we go to Cozumel, I'm sure we'll do an offshore as a group. But then, dude, I want to work. But along the way, I think we could have a lot of fun together. But it'd be like dinners and cocktails and group work and that kind of stuff and guest speakers. So it's just like, boom, that's the fastest they had. The fastest, and that means it's going to be less of your time. It's going to be less expensive. So I don't think it can be done any cheaper. And if we meet in Nashville, it's going to cost us more. So let's just do that. Okay? But if we can do like group helicopter flights over, exploding volcanoes, sure. But yeah, I want it to be serious. I'm not a vacation guy. So that's my thought. Anyways, all right. So we got a question, standard deviation. Great. Where's my mouse? Where's my drawing tool? It's missing for some. Oh no, there it is. I see it now. All right. So look, there's a bunch of things that you want to calculate in here. First one is y equals mx plus b. Okay. Y-axis, x-axis, intercept. M is equal to the rise over the run. Okay. so that there's two things. M is M because it's the mean, but we're not interested in the mean. We're interested in the slope of the mean. So this is actually slope of mean. So you have to know that. Slope of mean. Not just the average, but is it bullish or bearish? And to what degree is it bullish or bearish? So you got to go all this. So you look at this chart and you would break it into here. So there's an x-axis, y-axis, and an intercept. Okay, great. So you got all that down, and so you've calculated the slope of the mean. So it might look like this or something. Okay. So in this chart here, you got your intercept, your x, y axis, and then you got this, and then you calculate the rise over the run, which is your M. Okay, great. Then the next thing you want to calculate is variance. So when you look at all of this, how far does price tend to vary from the mean? Okay, variance. So you're measuring this distance, this distance, this distance, this distance, and then eventually this distance, right? So all of these, and you calculate that, there's the variance. And then the last step is that you take the variance, you do the square root of the variance, and that equals the standard deviation. And that's how you get to standard deviation. Everybody's been to a cruise to Cozumel before? Very nice. Cool. And that tells me keep going. All right. But that's it. That's the standard deviation. So what it says is when you get to this point or this point, it tends to go back to this point. That price, this price on a regular basis deviates from the average, a standard deviation. Okay, gotta run, yo. That was real. Love you, babe. Gotta jump. Peace on earth. May the pips be with you. May our profits be above average. Cheers. That just happened.